just want to throw up this quick chart on iron ore in particular, 87.12. The fortunes of iron ore, Australia in general, so closely correlated with Chinese policy. It's been a roller coaster ride. We're now back in the black. These are Singapore futures, but isn't the concern is that the policy momentum coming out of Beijing may change after the party congress? Barclays, for one, its most recent note saying that it sees a collapse back to $50 a metric tonne because it doesn't see this kind of steel sector support in China being sustainable beyond the end of the year.
Yeah, I suppose there's a couple of dynamics there. Certainly for us, we do feel that the environmental issues now driving this policy are really embedded, I think, in the decision-making of the Chinese government now. And I think that's going to be an ongoing multi-year type of trend, which I don't think will go away. Certainly the issues around capacity closures themselves outside of that environmental issue could certainly weaken, I suppose, after that party congress. But I think those driving forces around environmental issues will keep these constraints on steel capacity in China.
Hey, Daniel, what does that mean for the outlook in 2018 and 2019 for the iron ore producers? We heard earlier this month from Rio Tinto they're pretty positive on the outlook in China for the coming 2 years. Are they right to be positive? Is iron ore going to continue to defy those predictions of a price collapse?
Yeah, I mean, we think so. Certainly, we're not expecting to see, very strong sort of double-digit growth that we've seen in the past. But certainly, those expectations of falling steel demand, I don't think will eventuate. We have these long-term, large infrastructure projects really driving, the growth in demand for steel at the moment. And in the housing sector, we're certainly seeing inventories whittle away, which certainly present, I suppose, a much stronger platform for potential growth in steel demand from that sector as well. So, we feel that into 2018 we could still have a broadly positive macro backdrop in China, which, with the issues around steel capacity and certainly the lower growth in output from some of the major exporters, does present a broadly sort of tight iron ore market, which should keep prices where they are at the moment.